go, Michael. We are live. How are you doing
I
today?
am super duper, Martin. How are you doing?
Doing great as well. It's great to
Good
be back
morning.
live. Yeah, it's great to be back live.
We said we were going to be back live on Friday. Here we are.
Yep, exactly.
We want to welcome everybody from the AGTP family. We do this every day. We go live every weekday. We try.
Mhm, mhm, mhm.
Even on the days when we don't go live, we do it taped. We are always here.
Always, always.
We don't miss days. Have we missed days, Martin?
Never. We never miss days since month, Michael. We are always here to talk
It's
about the
been a while.
most important tech topic. It's important.
We do. It's very important. What day is today, Martin? It's Friday, the 12th of June,
Yes,
2026. There's some big stuff happening. As
very big
always, I
stuff.
feel like every day you wake up and there's just like bigger news than there was yesterday. Well, I want to talk about SpaceX
Mhm, mhm, mhm.
completes the largest IPO ever. And, my initial reaction, as you can imagine, is ugh, but still, we'll get to that. I'm curious about your opinion. But I think in this case, I probably have more information than you do. Then also, I think this is going to be super too, Martin. Xiaomi
Mhm, mhm.
drops an open source AI coding assistant. What is it called? MiMo code? I don't know what that means. It sounds like something somebody would say if they'd didn't speak English really well. MiMo code. Anyway, and then later in the show, we will also be joined by Aman Arora.
Mhm, mhm.
He is the co-founder and CEO at Heizen to explore how AI native software delivery will help businesses build faster, operate leaner, and turn engineering speed into competitive advantage. Okay, Martin, let's talk about this SpaceX thing.
Yes. So I feel, Michael, like maybe just before we start, I think you should give the audience a little bit of background about yourself, right? Like because I think it's super relevant here. And maybe for all the people who join us for the first time, they should know like what you've been doing for your entire career basically before launching Undercover Media with me, right?
Do I
Because
have to say?
I think it's going to be very relevant here.
Ugh, I hate talking about this
But
because it
let's
sounds like bragging. I really hate talking about this. Okay, so I joined Morgan Stanley
Mhm,
right out of college. You
mhm,
may have heard of it, a small financial services company based in New York. Over time, I worked mostly at Morgan Stanley and Goldman Sachs for most of my career. If I was there for 20 something years, I did 16 years working at Morgan and Goldman. At Goldman Sachs, I was senior on the portfolio trading desk. I've traded every stock in every country, on every exchange all over the world. And because you sit on an on an equity trading desk and you have connection with some of the biggest fund managers in the world, including BlackRock and PGI and State Street, and I mean, I could go on and on, and Janus and Fidelity and all these people. What it means is that even if there's an IPO in the United States and you're sitting in Tokyo, you're still involved in that IPO.
mhm,
So we weren't part of the M&A team or the sort of investment banking teams, but the investment bankers don't have the same relationships with the customers that we have. They go out and they do the roadshow. But on the day where this thing, or even before, when they're trying to build the book, is what they say, when they're doing their roadshow, they're building the book of people that are going to participate in the IPO. A lot of it has to do with the people that sit on the trading desk because they talk to the clients on a day-to-day basis. They talk to the traders, and the traders will talk to the sort of the investment team at these big financial services companies that are on the buy side, right? People that are actually buying this stuff in the IPO. So I've been involved in I don't know how many IPOs.
how many? 5, 10, to 50?
I mean, I did trading 2000, a decade and a half.
Okay, wow.
So at a few different companies, and yeah, you see different behavior on different trading desks, but at the end of the day, the customers are essentially the same.
Okay.
You know what I mean? Like the top 10 investment management companies and mutual fund companies or investment companies are still the same today that they were back then. Some of them have merged together. Right? It's
Okay.
like BlackRock bought BGI and stuff like that. But like State Street's still State Street, Janus is still Janus, Fidelity is still Fidelity, and Capital is still Capital. Like all these companies are still there
Mhm.
and they're still running gigantic funds. Here's the other thing that people should know too, and we'll talk about this in the context of SpaceX, is that a lot of money. Like, let me just go to it right now because I was looking at this earlier. How much money is benchmarked, meaning is fund managed into the S&P 500?
Wow, I don't know.
Do you have an idea?
No, I have no idea. I have no frame of reference at all.
$20 trillion.
Okay, so what does that mean exactly?
So that means that every time, it's like, do you own an S&P 500
Yes,
fund?
yes, yes, yes.
You do.
Yeah.
Right. So that means your money is included in stuff that's benchmarked to the S&P 500 because
Mhm.
the company that runs your fund may not invest in every single stock or in the ETF in the S&P 500, but what they may do is look at it and just do what they call an optimized S&P 500. Because there are a whole bunch of stuff, like stock 490, 491, 492 could be, I don't know, I haven't looked at the S&P 500 in a while, could be close to going bankrupt, could be coming out of the index. And you don't know this, but there are index inclusions and index exclusions happening all the time. So names are going in and out. So it may be the case that your index fund, unless again you just own an ETF, does not exactly own the index. But what it also means is that if your company like Apple, one of the reasons why Apple keeps going up is because it's part of the S&P 500. So every time someone like you takes, whether it's $1,000 or $100,000 and puts it into an S&P 500 index fund, right, where you don't buy individual stocks, they have to go out and buy all of the names in the stocks. And depending on how the S&P 500 is weighted, right, every time they go and do that, they have to buy not all of them, but they'll definitely buy the big liquid names in the index. So getting into the index is a big benefit because it means that people literally have to buy your stock, whether they want to own it or not.
Yeah, you have to, right? Because
if you underperform, let's say you're like, I'm not buying Apple stock, that thing's going down, and you're an index fund manager. What if Apple goes up 20%? Well, now your fund massively underperforms the index, and you're in deep trouble because you've promised an index return to your clients, right? So if that's the case, you still have to give them the index return. You just took trading risk on something where you really were not meant to take that risk. So we'll talk about it in a few minutes, but SpaceX was actually put in a couple of indices.
Okay.
But normally there are rules, and they're not even normally, there are just rules around what does and doesn't go into the index. So you can't just like beg somebody in most cases to get into the index. You have to meet certain criteria.
Okay.
But in this case, Elon Musk, who has way too much power and way too much influence, begged his way into a few of the indices, which means what?
Tell me.
It means people have to buy, not people, but like the index managers have to buy I almost swore, but I don't want to swear when nobody else is here. But whoever's listening knew what I was going to say.
Yeah.
Just those indices have to go out and buy the stock.
Yeah. So actually, can you run us through the timeline? Because you explained to me last time, it was very, very helpful. Like before there is the IPO, there is some sort of roadshow, right? Like where the people,
because you want to go out. So
Yeah,
you
so
have to,
how
I
does
think
that
you have to register an S1 to say like we intend to list publicly, initial
Okay.
public offering.
Okay.
And we intend to list on this exchange, whichever exchange it is.
Okay.
Okay. And then a bunch of investment bankers get together and say, like, we want to run this book. We want to manage the syndicate that actually does this IPO because they get paid for it. And in this case, they only raised $75 billion.
They only raised $75 billion?
Yeah. So you don't have to float every share that you own. That's the other thing too. And what they did was, I think they floated 4% of the outstanding. I can't remember the number off the top of my head, but it's somewhere in my notes.
Yeah, but that's actually super tiny, actually.
But again, so what they're doing is they're creating an illiquid batch of stock that people are going to have to trade, which is why it's not open yet, right? So the publicly available, let me just see.
Chichin as well, yeah, it doesn't look like it's open yet.
So the Class A shares represent just over 4 to 5% of the company's total available equity.
Okay.
So it's nothing.
It's nothing. And so, like, for example, for Apple or for Microsoft, like, is it like 10%? Is it like 50%? Is it like 80%?
Right now?
Yeah. Just to have like a frame of reference.
Approximately 99.9% of Apple stock is publicly tradable.
99.9, okay.
Of their total shares outstanding are publicly available to trade as free float, which equates to roughly 14.65 billion shares out of 14.69 billion shares, according to the Google Gemini machine.
Oh, wow. Okay. And so SpaceX bought only 4% of the company.
Yeah, which is why it was massively oversubscribed, because if you want to own any of it, and then if it's going to go into an index, you've got to buy its weighted amount of shares in that index
Mhm.
out of a float that's like very small.
So is there like a world where you can actually force everybody to buy at exactly the price that you want because you just
No,
put on the market exactly the number of share that everybody is going to buy? Like if you
it's not that. No,
no.
you can't do. I mean, sure, you can try to do that, but it's like it's almost impossible to know. But
Okay,
the other
okay,
key thing that happens here, Martin, is you just because you filed doesn't mean you have to actually do the IPO,
okay, okay.
right? And it doesn't actually mean you have to do it on the date you say you're going to do it. There are rules around it, which I don't remember off the top of my head. But in this case, what happens is all those investment bankers go out and they talk to their clients. They go do a roadshow. They say what the profits are expected to be and blah blah blah.
Mhm.
And then you gauge, and when you're talking to them, you also talk to them. What price would you pay for this?
Mhm.
So that price of 135,
Mhm.
they didn't just like make it up out of thin air. It's probably like where their clients told them they were willing to pay.
Okay, okay, okay.
And there are a lot, and because again it goes into the index, a lot of the big fund managers probably bought stock on the IPO.
Okay.
And I think I think it goes into the indices that it was included in 10 days.
Okay.
Okay. But we don't know but we don't know what price it's going to go into the index because that the day that it actually goes in, it goes in probably on the close.
Okay.
And that means, and I've done some of these inclusion trades. That's what it's called, an index inclusion trade. It generally goes in on the close, which means there's going to be a lot of shenaniganry, a lot of like insane trading around the close.
So which means around 5 p.m. Eastern time, something like that?
It depends which index it's going into.
Okay.
So it's going into three indices that I know about. The FTSE, give me a second. It's going to the FTSE Russell Index, the MSCI, so the Morgan Stanley Capital Index, the FTSE Russell Index, and the NASDAQ 100. But the reason why, and I want to go through some of the details as well.
Mhm.
But the reason why I asked you how much money was benchmarked to the S&P 500 is because it's not, because the S&P 500 is a pretty strict index. And it said, yeah, you can beg us all you want, but you're not going to be included in the S&P 500
Okay.
because you don't meet the criteria. And if you look at SpaceX's like revenue, $4.7 billion, it's a net loss of $4.3 billion and capex of $10 billion.
Okay.
And they have $29 billion of debt, which is not necessarily a bad thing because I don't know what the interest rate is on that debt. And I don't know what their debt service looks like based on the revenue that they have. But it's a loss-making company.
Yeah.
And you have to be a profit-making company over a certain number of quarters actually to go into an index generally.
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 Including the Nasdaq generally.
NASDAQ 100, yeah, I mean the rules say
Okay.
you have to be making a profit.
Mhm.
Why
Okay.
would anybody want to put into an index a company that's like losing money? Because sometimes what happens, Martin, is if you're in the index, let's say you're Kodak
Mhm.
back in the day,
Mhm.
and your whole business falls apart.
Mhm.
Why are you part of an index that's measured? Because the index itself is not there just for investment purposes. It's supposed to measure like the strength of the U.S. economy
Mhm.
at some level and be representative of the U.S. economy.
Mhm. Mhm.
Would you say that SpaceX is actually representative of the U.S. economy for a company that's losing money when Apple's printing like $100 billion of profit every quarter? And I'm making up that now. I don't know that number, but I know it's something like that. Yeah.
What's the valuation of Apple right now? Around 4 trillion, 3.5 to 4?
Guessing it's four. I'm guessing it's $4 trillion, but I mean, I can easily figure that out.
Something like that. Because it means that SpaceX is like half the value with what?
Apple's $4.3 trillion market cap, and SpaceX went out at 1.75 trillion. But again, it depends where it opens today, but around there.
Mhm. Mhm. With like only $4 billion of revenue, right? Compared to Apple,
Well,
who.
so let's go through some of this, right?
Mhm. Mhm.
Let's just go through some of this. So with all that information, SpaceX priced the largest IPO on record. They raised $75 billion. We already said that was 4 to 5% of the float out there. The IPO is going to price at $135, giving the company a valuation we said of like 1.7 or $1.75 trillion around it. It just depends, right? And it makes it like one of the top 10 most valuable listed companies in the United States, despite the fact that the company's reporting losses. And it's still going to expect losses as well,
Mhm. Mhm.
right? So, and the core business where they make most of their money is Starlink,
Mhm. Mhm.
which is not really like a space business, nor is it an AI business, to be fair.
Yeah.
I mean, because
No.
Starlink, what does it do? It's just an internet service provider in the sky at some level.
We could say it helped them create the network of satellites, right? Like they have a massive number of satellites right now in space. They could use them for doing whatever they want, maybe, right?
Sure, sure.
But yeah, they provide internet to people.
But they sold themselves. Here's the other thing too, and this is what I thought was actually really funny in the way this news was reported. I want to find this, right? Yeah. So they only issued $75 billion of shares, yeah?
Mm-hmm.
And total orders hit $250 billion. So whatever that is, that's like 750, 120. Yeah, so it's like almost 4 times oversubscribed.
Mm-hmm.
And they're bragging that retail investors alone put in $100 billion of orders.
Okay, retail investors are people like me, for example.
No, because you're too smart to actually participate in this IPO. So nothing like you.
Okay.
That's why I want to talk about this, right? Because they say retail investors alone submitted, and this is the way they're going to report it. Like, yeah, this was in such high demand that a bunch of idiots with low information got put in $100 billion of orders, which they did not get filled on.
Okay.
They were allocated about 20% of the shares. So what's 20% of 75? 14,
something like that, yeah.
$15 billion out of a $75 billion share offering. These are like, I'm just going to say this, right? Because retail investors are considered low information, particularly compared to institutional investors. Yeah. Because institutional investors are participating in IPOs on a regular basis. They have massive teams that do analysis on all these companies. And in some cases, they'll go like, we're going to pass because this thing's making a loss. But again, in other cases, it becomes very political, right? Like, we have to be in this stock. First of all, because it's going into the index, so it may actually go higher. And second of all, because every other index fund is gonna buy it. Every other big investor is going to buy it. And apparently BlackRock put in an order for at least $5 billion.
Okay.
But again, you have to understand, like, why for a company like SpaceX, why would they put in this? Why would they put in orders of that size?
Tell me.
Well, again, who knows? Maybe they want to curry influence. But so BlackRock put in orders. Let's just do this. How much money does BlackRock manage? So BlackRock manages $14 trillion.
14 trillion.
So what's 5 billion divided by 14 trillion?
Yeah,
that's 5 over, but it's 5 over 14,000, yeah?
Yeah. It's nothing.
Give me a second. 5. It's 3.5 basis points.
So 0.35%, right?
No, 3.5 basis points. So it's 3% of 3.5% of 1%.
Okay, so
0.035.
Okay, so it's absolutely
so 1 basis. There are 100 basis points in 1%.
Okay.
So it's like 1% divided by 100, and this is 3.5% of 1%. So they don't care.
They don't care. That's nothing, yeah.
At all. Anyway.
It's actually small, right? It's actually really, really small. Like, I mean, in the
context of the amount of money that they manage, it's nothing. It's zero.
We could actually say like they put only 5 billion, which means like they're like the trust that they have in.
But again, who's this news for? I'm just reading some news. Who's the news for? The news is for those. I don't want to say dumb because that's mean, but this is for the retail investors who's like, they put in, because if I said to you, I'll give you $5 billion.
Yeah, for sure.
It sounds like a lot of money.
Yeah. As an individual, it's huge, yeah.
It's huge. And that's the order that they placed. So let's just say everybody only got 20% of the orders that they put in, because nobody gets 100%.
Okay.
Some people get more, some people get less, but let's just say on average, everybody gets 20%. That means they got $1 billion. So now it's no longer 3.5 basis points.
It's 1.
It's 3.5 divided by 5.
By 5, sorry. Yeah.
0. So it's less than 1% of 1%.
Yeah. Yes, actually, that's sending like the opposite signal, right? Like it's like
Yeah, but it doesn't sound like it's sending
yeah,
the opposite signal. And that's why this is so disingenuous. And that's why I think that like when you go through like here's the thing. Let's just go through some of these numbers because I think I put the wrong tags onto this. No, that's for the first quarter of 2026. Excuse me, was $4.9 billion. Their 2025 revenue was $18.7 billion, and they had a $4.9 billion net loss. In quarter one, 2026, just to get it right, it reported $4.7 billion of revenue and a $4.3 billion net loss, which means that just in the first quarter alone, they lost $4.3 billion. Last year in total, they had a $4.9 billion loss. So it's getting worse, not getting better. And their AI related spending has become a major driver of their capital spending. That AI segment lost $6.4 billion in 2025 and already $2.5 billion in Q1 2026.
Yep. So they also signed the compute deal with Anthropic and Google, right? So on the plus side, I would say, right, which is going to generate a lot of revenue for them. And that's new. That's like since a month.
Sure.
I think it was like what, like 1 billion a month with Anthropic. I think something
Yeah,
like
but that doesn't include any, like, but what it doesn't tell you is what their costs are associated with
we
those
don't know. Yeah.
investments. But just like, you know what I mean? It's like I signed a $100 billion contract with Microsoft,
Yeah.
but they're spending $99 billion to manage my contract.
And plus, like all the AI deals that we've seen, like on the compute side, have always been leaned to a certain amount of usage in the next X years, right? Like so,
Right. So
for
that
example,
contract, so yeah, so
yeah,
Martin, it's like this to me is like an NFL contract.
yeah, something like
Okay.
that, yeah,
So do you know what the National Football League is, right?
of
So what
course.
does an NFL contract look like? Running back A signs a 4-year contract for $100 million, averaging $25 million a year.
Yeah,
But the last 3 years aren't guaranteed.
yes, something like that, yeah.
And the first year is 25 million bucks if they rush for 1,000 yards and catch 400 passes and the donkey in their backyard doesn't die. Like, do you know what I mean? Like it's incentive laden. So if whatever deal that Anthropic and whatever did, maybe they paid for up to, I'm going to make up a number, like $10 billion of compute.
Yeah,
But that's not going to say they're going to use it all.
exactly, yeah. And plus, like maybe there's some some condition, right? Like very similar to the NFL type of contract, where SpaceX has to use Anthropic or has to do this or do that for actually Anthropic to keep spending money with them. And all of that we don't know, but all the over compute deal has been structured this way. When Amazon or Microsoft give money to the AI labs, it's always linked to a certain amount of computing bill than the AI labs are actually spending to the
Yeah.
hyperscalers.
Right. So again, this is we call this is like I don't want to say the word, but it's like money I give you and then you give me that money back, right? So I
Exactly, yeah.
agree to give you $10 billion of spending on your compute, and if I do that, then you agree to give me $8 million to spend on Anthropic or whatever it is. Yeah. So it's like who's really winning? But the point here is that the company itself has scale. It definitely does. And SpaceX is now the most prolific rocket launcher in the world.
Yes.
At least in the Western world, for sure. But in my mind, and again, this is the conversation that I was having a little bit with Alvin Wong Kralin yesterday at Super AI. He was pretty apoplectic about this stock. He was like, this is ridiculous. He actually called it thievery.
Thievery. Okay.
Yeah. Yeah, thievery. Because he said one of the reasons why, and we also talked about OpenAI and Anthropic in the same speaking pattern. And that was because I said to him, like, don't you find it really coincidental? Because you and I have spoken about this both online and offline, but I said to him, like, what do you think? And remember, Alvin's been in the AI business for 3.5 decades. So, and let's be clear on this. I want to get his. Remember, you and I were talking about this on the plane last night? Where did he go to school? Right. I just want to get this right.
He works at Stanford right now, but
say again.
He works at Stanford right now.
He does work at Stanford, but I just want to get his education right because he's not just like some random dude. So he got a BS in electrical engineering at the University of Washington,
Mhm.
And then he got his master's degree um, at some small school in Boston called MIT. And then he got a master's degree in computer science and electrical engineering at another small school in Boston called MIT. So it's not like he doesn't know what he's talking about.
Mhm.
And you remember in all the conversations that you and I have had with him, he's always been really close to the MIT Media Lab and the
Yes, yes,
MIT
yes.
Research Lab and stuff like that. You know, we've had conversations with him where he was like, they've been working on that for 30 years kind of thing.
Yep, 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 I
We're
remember.
like, we thought we had new ideas. He's like,
Yeah.
that's great, but we've already been working on it. I've tested those things.
Exactly right.
And we're like, oh, God, okay, fair enough.
Mhm, mhm.
Anyway, he was like, because I asked him the same question. What did you think about the fact that, OpenAI and Sam Altman and what's his name? And Dario Amodei came out with these statements about like, we have to be really careful and all this other kind of stuff. And he's like, please, they're just getting ready for their IPO because this is the biggest thievery in the history of the world.
Mm. So SpaceX plus Anthropic plus OpenAI as well. The flow.
Yeah, he said all of these model companies, right? Because the bottom line here is none of them are making any money,
Yep.
right? None of them are making any money at all. And their path to profitability doesn't seem clear either.
I think like especially for Anthropic and OpenAI, right? I think for SpaceX they build the infrastructure, so I think it's slightly different for them. But for Anthropic and OpenAI, and I mean they don't have any infrastructure. There is more and more competition on the model side, right? We have no idea what it is going to look like in a couple of years. It's dangerous for them for sure. It's
It
way more
is.
dangerous.
It is. But their rocket business doesn't make any money. The XAI business doesn't make any money.
Oh.
And the only business that does make money is their Starlink business.
Mm.
And that is a highly regulated government related business, right? Because somebody has to give them the right to throw up a satellite. You can't just drop a satellite into space with no permission.
Yeah. Yes, 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 yes.
And, Elon Musk's relationship with governments globally varies, let's just say.
Elon Musk mood varies.
It just varies.
Yes.
And the richer he gets, the crazier he gets. So the more volatile his personality gets. So it just makes him harder to deal with. And he has an up and down relationship, like I said, with governments globally. So the likelihood that he's going to get, and he said he wants to put 1 million satellites in the sky.
Yes, he has like 10,000 right now, right?
Some 30,000, I think, was the real number. I can't remember what the number was. No, he has 10,000 and wants to get to 30,000 soon, and then he wants to get to 1 million. Fair, right?
I think that's something like that, yeah.
But the other bottom line here is one of the reasons why these companies are rushing to IPO, and this is one of the things that Alvin and I were talking about yesterday at Super AI, was that they have to have a window during which it still feels like there's an obsession with what's happening, like some kind of irrational exuberance with what's happening in the AI market.
Right.
Because all the people that have invested in this at the early stage, but even in the late stage, like the people that just put $30 and $65 billion into Anthropic, they're making an IPO bet, right? They're not making a 5-year bet. They're making a 6-month bet. So all these companies want to cash out. And what happens is they see SpaceX XAI list at 1.7 something trillion dollars, and they see Elon Musk become the world's first trillionaire, and they just think, what are we doing? because again, retail investors alone submitted over $100 billion of orders. So that tells you that there's retail demand out there for this, whether it's right or wrong.
I see what you mean. Yeah, I see what you mean.
You see what I mean?
Yeah.
So go ahead.
No, I really agree with the idea that they need to cash out at the peak of AI, right? Like I think with everything that has been happening in the last few months, with all the fear, that has been built out, right? Like by OpenAI and Anthropic themselves, but AI is too dangerous, AI is going to take your job, we need to create guardrails, and blah, 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 right? Like it just creates like so much confusion, so much like, oh yeah, AI is too powerful, AI is too strong, right? But this is going at some point, this is going to fade away, right? Like this can't be sustainable. So maybe right now you're right. Maybe like they feel that right now is the moment to actually cash out because the the tension is at the maximum before it actually goes down, when people realize that AI is not that strong, AI actually is still making some very stupid mistake, or the Chinese open source model force everybody to change their business model, right? Like maybe right now in terms of marketing, it's actually really the most intense moments. Yeah.
Yeah, and that's and this was the conversation that Alvin and I were having.
Makes sense, complete sense. Yeah.
He was like, they're rushing these things through because, and in some cases, like for OpenAI and Anthropic, they may not even care where they go into the index or not. They just want to issue their stock because even they feel like it's wildly overvalued. Think about it.
It is.
A company would never, like, not never, but a company like SpaceX would never sell stock to the public if it thought that its stock was going to be worth more later. Sooner rather than later, right? Because otherwise, why would they sell it to you unless they needed the money to grow?
Yeah.
Right? Because the real reason to do an IPO, like the reason why Apple went public, the reason why Google went public was because they wanted to raise money to grow their business. They saw a potential growth possibility and they wanted to let investors participate in that growth. But like, that's not what's going on now, is it?
Like we just, in a way, we just raised 80 billion, right? That's 75.
Yep.
So compared to the $120 billion raise from OpenAI and the 100 in total from Anthropic, including the 2 rounds, 30 plus 70,
95.
something like that, 95. So yeah, so that is a smaller fundraise than the 2 AI labs, right? So which means if they really wanted to raise 100 billion, they could probably do it on their own without the IPO.
Yeah, for sure.
Yeah.
So Google did a public offering on August 19th, 2004. So 22 years ago.
Okay.
I remember it like it was yesterday. And the total value of Google at IPO was $23 billion.
Oh, wow. 23 billion.
It was 22 years ago. So you could say, like, let's, I don't know, multiply it by 10, let's say, but inflation hasn't been 10 times. That would still only be $230 billion, which is still 1/8 of the IPO for SpaceX. Okay. And the path to profitability for Google was way more well known and way clearer than it is for SpaceX.
Yes, I guess.
Yeah.
I don't remember. I was not following the IPO so closely, Michael, but
in 2004 you weren't.
Nope. But I guess, yes. I guess it was clear.
You were outside playing in the snow.
Exactly. Probably, very likely.
You were picking grapes.
But so then, what is going to happen from a stock market standpoint, right? Like, should we buy?
So what do I think is going to happen?
Yeah,
I'll tell you
yeah,
exactly.
yeah.
I'll tell you what exactly what I think is going to happen. If you go out, and I didn't do this today because I just didn't have time. But if you go back and you look at the performance of very even high profile IPOs, for the most part, from list, because remember, there's also a what's the word? There's a lockup period.
Right. Yeah.
Right. So all the people that buy the stock in the IPO and even the people that own it can only sell a certain percentage of their shares into the IPO. And they have to hold it after it goes public for somewhere between 3 to 6 months, depending. Okay. The other thing, Martin, that you have to remember, so that means that there's natural selling demand that's always going to cap the market.
Okay.
Because it's all, you know that like in a few months. So what normally happens when an IPO is, people participate in the IPO. They pay $135, at least in this case, for $500 million of stock, 555 million shares of stock. Yeah. If you pay for it in the IPO, like unless you're a day trader, and the thing spikes up 60%, which is possible, you may sell right into that.
Okay.
But then what normally happens is the stock dribbles lower for the next like 6 months because now short sellers think, well, it's way overvalued.
Okay.
In this case, the percentage of float is really low, so that may make the ability to buy and sell this stock, the liquidity actually premium may still be there. Like there's just not a lot of stock out there. So if a lot of people are not selling, and it depends, I don't know how much that stock is locked up either of the public float. Go ahead. You're gonna ask a question.
Public information? The lockup period? Okay.
I think so.
Okay.
But again, there's just this hanging offer out there in the stock. Okay. Offer means the desire to sell, yeah?
Yeah.
If I said there was a sitting bid, that would mean there was a sitting group of people that wanted to buy the stock.
Okay.
And again, we
Yes.
don't know. There's matching that needs to go on today. Like, has the stock even opened yet today?
Okay. Yeah. Didn't open yet.
Not yet. You're still looking, right?
Yep.
But we don't know if that means that there's an imbalance on the sell side or on the buy side.
Okay.
But the point is, what normally happens over the next 6 months into the lockup, right,
Mhm.
is that the stock just dribbles lower.
Okay.
And sometimes if for people that couldn't participate in the IPO but wanted more shares,
Mhm.
they'll buy it on IPO day, or maybe they'll wait until the next day to buy it if they feel like it's going to drip a little bit lower.
Okay.
But sometimes people get nervous,
Okay.
right? And they just start buying on IPO day.
Okay.
But generally, it's a bad idea.
Okay.
If you just go back and look historically, even for great tech companies, yeah.
Okay. Until the lockup period is over, basically, and then we go back to the normal free market.
Yeah, then but again, you're only 4 to 5% of the stock is actually out there
Yeah.
floating, so there's still not a lot of stock out there to trade.
Yes.
But I feel like again, this stock has no path to profitability,
Mhm.
and the index funds have to buy. But once they're done buying, it's not like they're going to buy more unless people keep putting more money into their fund. But again,
Mm.
the reason why I asked you how much money you thought was benchmarked to the S&P 500 is because it's not going into the S&P 500.
Okay.
The S&P 500 said no.
Say no. Okay.
Okay.
But the
The
Nasdaq
NASDAQ 100 said yes. So now, how much money is benchmarked to the NASDAQ 100?
Tell me.
What do you think?
What was the amount for the S&P?
$20 trillion.
Okay. Nasdaq must be smaller. Tell me. Tell me.
Good guess. $800 billion.
800 billion? Okay. Wow.
Mm.
Okay. It's much, much, much smaller than.
Yeah.
Mhm. Okay.
Yeah, it's less than 1/20th.
Yes. It's tiny.
So how much buying actually is there actually going to be? And I didn't look at to see what the FTSE Russell was,
Mhm, mhm.
or the other, or the MSCI. But I mean, the MSCI is going to be hard to tell because the MSCI is a massive family of funds.
Yes.
So you need to know like which particular space in the MSCI that the SpaceX was going to go.
Mhm, mhm.
I don't know it off the top of my head, and it was hard to tell for me from doing the research that I was doing.
Okay.
But again, the index implications could be pretty big on the day that it goes into those indices, and it's not on the IPO day. In
Okay.
most cases, particularly for a company that's loss making as opposed to profit making.
And
But again, but Martin, you have to understand how much this stock inclusion is gamed.
Okay.
So here's what happens:
Tell me.
big companies that don't trade,
Mhm.
and even if they do trade, even if they do have money indexed to, let's just say, to the NASDAQ 100, they know that if they give their order to a broker to guarantee the close for them, which guarantees that they have the index price,
Mhm.
they don't want to underperform. And if you underperform on day one, you're going to underperform forever, potentially. You're going to have to do a lot of really savvy trading to catch up.
Mm.
They may not buy on that day because they may feel like it spikes up,
Mm.
which means that the entrance price into the, let's say the entrance price into the index is 5% higher than it should be.
Mm.
Well, once all the buying is done, if some percentage of people, if the majority of the percentage of people that need to buy the index do it on the day that it actually goes into the index, well, then you can just wait.
Mm.
Because now there's no natural buying over the next like 4 or 5 days. Again, you wait for the stock to drip lower, and then you buy it 3% lower than the price that it went into the index. Now you're already winning.
Yes.
Do you understand why mathematically? Yeah.
Yeah. Makes sense.
So there's you cannot imagine the gamification that goes on the day of the index inclusion.
Yeah. It looks like that's actually the big deal, right? Like the IPO is the first step, but then the big deal is when it goes into the index or not.
So let me just give you an example, okay?
Yes.
I forget the year, but I can look it up.
So Michael, just for
I know.
information. Okay. If you know. Perfect.
I know. There was a massive Nikkei rebalance. Okay, the Nikkei has 225 stocks in it.
Okay. The Nikkei is the Japanese index, right?
It's one of the Japanese indices.
One of them. Okay.
I cannot even remember, Martin, how many names went in, went out, but I think it was like 19 names went in and 19 names went out.
Oh yeah.
Because they were changing, because they wanted the Nikkei 225. There's more money benchmarked to the topics.
Okay.
I'll say this quickly. But when we did this big inclusion trade and exclusion trade, remember 19 names go in, 19 names go out. I think it was 19, but again, it was 20 something years ago, so I can't remember.
Okay.
Do you know how much money Deutsche Bank made on that trade?
Mm-mm.
As an institution, remember, we didn't care like what was going in. What we did, but we weren't indexed to anything.
Mhm.
But we had massive orders from Japanese companies that had to buy stock and had to sell stock.
Mhm.
Made $225 million on that trade, which
Okay.
means that we bought stock at a price that allowed us to make 225 million, or sold stock that was going out of the index.
Mhm.
We had such a big spread on that trade that we made
Mhm.
$225 million. So tell me it's not gamified.
It's a huge game indeed.
But it also means that every Japanese company,
Yeah.
every insurance company, everybody that was indexed to the Nikkei 225 bought and sold stock on the inclusion and exclusion at the wrong price
Mm.
for them.
I see. Yep.
Anyway, should we go to our guest?
Super interesting. Thank you very much, Michael, for all the explanation. And
if
yes,
anybody has more questions on this,
yes.
please feel free to ask me, because it's way more complicated than that.
Yep, but I think it's really interesting, right? As you say, there's a lot of gamification going on, and this is all
Well,
the
but in
thing
a way
that
you could never understand.
Yep.
Aman,
Exactly. Hello, Aman. How are you?
hey man,
Can you hear us? Can you see us? All good?
you
Yes.
are audible and visible indeed. Okay,
Thanks for having me.
thank you very much, Martin. Let's start this thing.
Yes, let's go. Enjoy, guys.
Okay, thank you.
All
So
right.
Aman, it's great to have you here. Thank you so much for participating in this. The co-founder and CEO at Heizen. Do I have that right?
Yes, that's correct.
Love the t-shirt, by the way. Are you standing?
No, currently I'm sitting.
Oh, I thought I had that right. Okay. Well, we wanted to have you on because we wanted to talk about how AI native software delivery is going to
Right.
help businesses build faster, operate leaner, and turn engineering speed into a competitive advantage. But maybe you could, before we jump into the conversation, maybe you can tell us a little bit about the important stuff that Heizen does, just so people have some context. Yeah.
Sure. I think thanks for having me,
You're welcome.
Michael. It's a pleasure to be here. I can quickly give a brief of what Heizen does and what we're trying to do. Right. So at a very high level at Heizen, we are trying to build an AI system that can solve some of the hardest problems in supply chain. Supply chain is a bunch of disconnected systems sitting in siloed teams. So it's very difficult for plug and play AI to work. And plus, the data is very messy. So, our goal is to build a system that can make AI work in supply chain. And that's what we're trying to do.
So let's dig a little bit deeper into this. You mentioned a little bit, right? But what is the problem here? Maybe you can talk about the data, maybe you can talk about the system fragmentation, but talk a little bit more deeply about what needs to get solved here and where artificial intelligence comes in to be able to make this better and easier, like automating this delivery of this software. Yeah.
Right. So, I mean, a simple way to look at it is supply chain has not evolved in terms of work output as much over the last decade. If you look at most of the supply chain team are spending still almost all of their time on spreadsheets, Excel. There is so much manual work which is happening on phone calls, emails, messages. They've bought these large ERP systems. They have separate procurement system, demand planning systems, but you still find people spending almost half of their week doing all the work manually, right? So there's definitely an opportunity for AI to create a lot of efficiency in these businesses. Second, it can directly have margin impact. There is this great research around just one small problem within supply chain, within procurement of right supplier selection is like a $200 billion impact opportunity, right? Because all of this supplier negotiation so far happens manually. So when you do manually, you can only negotiate with only a certain group of people. You cannot negotiate with everyone. So what ends up happening is supplier negotiation is limited to just top 10, 5%, 10% of your suppliers. You're not even talking to the best supplier who could give you a best price. So you're just missing 85, 90% of the suppliers because the economics doesn't make sense. Now with AI, you could have an agent that could 24/7 onboard all your suppliers, negotiate with them, run the RFQ process, and then find you the best supplier at the best price. And you can save dollars on every supplier negotiation. And as a result, you could probably save 3 to 4% just in this area, which could translate to hundreds of millions of dollars for a business which does billions of dollars in revenue.
So if this proper software development or the sort of digital transformation has not necessarily taken place over the last, as you said, 7 to 10 years in the supply chain business, what is the reason why that development hasn't happened? Is it because the legacy systems or the systems that they have internally just simply are not ready to be disintermediated, or is it there simply wasn't the right systemic creation out there for these supply chain companies or companies that are working in the supply chain so that they could actually digitally transform in a way that made sense for them, right? Combining all of this fragmented data into a way, like you said, we can talk about agentic AI in a moment, right? Because that's going to be one of the big changes here. But what stopped them from doing this in the past, and it's going to help them do it now that agentic AI is potentially possible for them?
Right. No, I think that's such a great question, and thank you for asking that, Michael. And that is the crux of what we are trying to do.
Go for it.
Every business has their own operational DNA, and I think that's the core insight I would like you to take away from this call. Right. What that means is every supply chain business has a way of working. So plug and play SaaS tools just don't work because you're trying to retrofit a tool into an operations, and the operations has to adopt to how the tool works. That doesn't work. The economics of making a custom system for the last 10 years also did not work. Like otherwise, somebody and a service provider will come and say it will cost you like millions of dollars in 2 years to build. Your supply chain has changed, the business has changed, everything has changed.
Right.
Now, what is uniquely happened, Michael, now, and what we are trying to do is, one, we believe that the most important thing to do in this business is understand the operational ontology of the business, right? Nobody really understand how the entire supply chain works. So your platform should be able to do that well, ingest all the data. There's so much tribal knowledge, so much work is happening on spreadsheet. Building that is the most important and critical part to be able to do anything in this business. Now, once you have done that, the second most important part becomes then, do you have the right data infrastructure? Your data is not very clean, it's very messy, right? So once you're able to cross point number one, you're able to cross point number two, then you have an opportunity to really build the agents which can create impact, right? To answer your question more precisely, our assumption is why it has not happened so far is, one, the operational understanding of the business is not as deeply there with everybody and with external providers, and that limits their ability to really impact ROI and really impact the right things. If I'm able to answer your question.
Yeah, I mean, essentially what you're saying is there was simply no way to build in other words, let me back up and say this. Microsoft could sell Excel. I didn't mean for that to rhyme like that. But Microsoft could sell Excel to Morgan Stanley and to Goldman Sachs and kind of didn't care how they used it because both of those companies essentially needed generic spreadsheets to be able to do their business back then, yeah? And that's why there was such a massive market for it. And that's why they could sell it to both companies, because both companies were essentially using that software in a similar enough way that it didn't have to be customized. But what you're suggesting is that it can't be that to customize it would be ridiculously expensive, and to standardize it would be almost impossible because every company views their supply chain in a way that's different. Their suppliers are all different. And at some level, they don't even understand their own ontology because they have never had to go out and sort of completely map out what that supply chain looks like. And it's dynamic. It's not static. So it's constantly changing as well, right?
Right. That's exactly right. And it's like so many teams trying to work together, and they have not been able to build that overall ontology about the business as a group, right? So there's a demand planning ecosystem, there's a procurement ecosystem, there's a logistics ecosystem. And now you want AI to work in this messy data ecosystems with siloed teams. I think the first step is building the right ontology. And yes, the economics now make sense. So you can build things custom. Until today, what they had is Excel, which they were customizing to their needs. If you can give them systems which they could customize in a way they want, I think the opportunity just unlocks for them to build agents the way they want instead of having retrofitted SaaS solutions.
So how do we, because this problem actually has to happen, I think, not in a linear way directly, but the ontology has to be understood first before
Right.
anything else can get done. And I would say in unison, there has to be some sort of data cleansing and data understanding as well. In other words, there are two levels of ontology. One is just sort of the physical business. How do we get stuff from point A to point B, C, D, E, and F so that we can get it to point G, so we can do some sort of whatever it is, whether it's manufacturing or some kind of distribution, to get that product from the place where it's manufactured out to a place where then it can get distributed. That's the
Right.
first thing. But the second thing is we also have to have our data in a way that's less fragmented, more well understood, and the ontology of the data as well. Otherwise, we can send an agent out to go do this stuff, but if it's based on bad data, we're going to get bad results at the end of the day as well. Do I have that right?
Yes, that's 100% correct, right? And how do you go about making that change
Yeah.
is
Can
exactly
I just jump in? Because that's the whole point. It's like, how does Heizen go out and then say, because for customer A and for customer B, the work you're going to be doing is different. The agentic AI that you're going to be giving and delivering to them, it doesn't have to be 100% different, but it could be 50% different, right? Because the activity that agentic AI is going to go out and do has to be different. How do you solve for that? And how much time does it take for these companies to actually be ready to be able to use the technology that you're building in a way that's sensible for them? Because they've never had to get their ontology right or their data right per se, because they've been doing everything manually.
That's correct, right? So I think let's go deeper into that. There are
Please.
two ways to do it, right? So what companies are trying is that they go out with some assumptions. They have a product, they have an AI product which can do something, and then they deploy these engineers to, let's say, customize apps as per the requirements of the customer. We
Right.
feel that's the wrong way to do it. The
Go
right
ahead.
way is you set your engineers first, right? So the entire concept of, let's say, what Palantir was trying to do, or the more FD model, where you have these forward deployed engineers that live and breathe in the customer's office, and they try to build that muscle of how the operations of the business works. They are able to work with teams to acquire data, figure out who has what. And then in the back end, we are building a ontology agent which can then consume and ingest all of that data and start mapping out the business of how it works.
Right.
Because again, if you don't do that well, everything else falls like dominoes. So I
Has
think
to.
that is the approach we are taking, where you send the engineers first and build the product as you go ahead. What also needs to happen is, everything that you do needs to then closely link to the ROI of the business, right? So another important job that you need to perform is you can build the ontology, right? Which is great. But for these businesses to invest, they need to get the right ROI out of it. So there are 100 things the supply chain business could do, but then you need to give them a clear picture of, these are the first three things that could move your margins by a couple of percentage. So that's where you should invest, and that's where we start. And then you start creating impact very quickly from day one. A lot of consulting companies used to do that. They used to do these benchmarking and assessment, but they never used to execute on that, right?
Sure.
So I think we're trying to combine those two parts, where to again simplify, build the operational understanding of the business, do the right benchmarking related with the ROI, and the actual part of building things. The world is solving for it. So the economics are getting better. You're able to build faster every month, cheaper every month, right? So that part is getting solved, and we are able to do that well and create customer delight because of that.
So if that's the case, though, are customers starting to think about what their token costs are if they're going to be running agents 24 hours a day, 7 days a week? And how does that impact their ROI as well?
That's such a good question. And, that's extremely important, that you need to migrate from a role of just being an engineer to a consultant also. You need to educate the business of what agent to build. Does that make an ROI sense? You're going to run this 24/7. It's going to cost you X amount of dollars. Maybe you lose more money than you make more money. And
Yeah.
supply chain businesses are a margin first business. Everything that they do impacts the cost. And, these businesses don't have 80% margin to spare, right? So they're
Right.
very margin constrained. Every percentage change can completely impact the business. So very important to guide them and consult them also what these token costs are going to be, and where should you implement AI and where you shouldn't, right? And that becomes as important part of the job as everything else.
Is there some sense out there now that the cost of using tokens is becoming more sort of well discussed, right? So if you go back to January, February this year, there was so much, I wouldn't say hype, but so much excitement around this idea of we can build agentic AI and we can do it in a way that lowers the cost. It's less expensive than maybe humans. But now that we understand better what running agentic AI over a certain period of time, regardless actually of how efficient they are, although efficiency does matter, is there some sense then that some companies would actually switch from some of the big US frontier lab businesses and use some of the open source AI out there to help lower their costs while still getting performance that's good enough for them to actually do all the stuff that you're talking about?
Right. No, that's exactly right. And I'll give you an example on that.
Please do.
That's such a perfect question to go deeper, right?
Yeah.
We're working for a customer, and let's say, in the accounting world, one of the problems to solve is OCR, right? So
Yep.
you could keep using these models, which can be very costly, and then you need a certain amount of accuracy on your OCR. You don't need to like keep evolving as the models keep evolving, right? So for a lot of these customers, what's becoming the first choice is maybe have an open source model, deploy it on our ecosystem, and the cost of get running it on our ecosystem with the cost of the running the open source models ends up becoming cheaper at scale compared to, let's say, keep paying these large labs a lot of money, right? So that
Yeah.
becomes exactly right in a lot of areas where you know how much intelligence you need, unlike coding where the more intelligence the better, because it just keeps getting better. But things
Sure,
like
sure, sure.
OCR, if you're getting the right accuracy, it's cross 95%, you're probably good. You don't need to consume OpenAI or Anthropic for that case.
Yeah. But are you seeing that happen? In other words, when you're having these discussions with some of your clients or potential clients, are they aware that they can use some of these open source models in a way that they can lower the cost associated with running their agentic AI?
No, 100%. And again, I'll go back to the same point that we need to evolve more as consultants plus engineers. We need to guide the business on
Hmm.
what will work, what won't work in the long term, right? So they're looking for that judgment from us when they're working with us. And they have a mandate on how much they are willing to spend. Of if that efficiency they get of the business, this is how much they will save. We need to, as a business, operate with those constraints and build the best system for them. Is it better to use Google Gemini for this, and at their scale maybe that is a better option, which was in one of the case for, again, for OCR. In the other case, it was better to deploy an open source model in their
Hmm.
ecosystem because at their scale it made more sense.
Yeah, I feel like what we're going to see is a bunch of hybrid implementations of this stuff, right? Maybe for the super intense work where you really feel like on the margin you need to have
Right.
the best model out there, they'll use some of these big frontier lab models. But at the end of the day, that for some of the stuff that's pretty repetitive and it's pretty well known, you can use an open source model to get that stuff done. Does that make sense?
No, it 100% does. But, time and again, what we see, Michael, is, intelligence is not the real problem. They had technology for a long time, right? I think what AI really solves for them is they could definitely execute a lot of workflows they could not in the past. But also the cost of getting these systems built and deployed, the cost makes sense now. So the ROI makes sense. They won't have to spend like 10 times, 20 times the cost they would have to 3, 4 years ago.
So workflow is actually a really interesting topic for me as well. Do you also get the sense that because now they can automate things using AI, agentic
Right.
AI in particular, that some of the, besides the fact that they now have to understand their ontology, besides the fact now that they have to clean their data or at least consolidate their data or make it in a way that's more accessible to agents, which in and of itself does take a ton of work,
Right.
that they also have to rework some of their workflows as well. That they have to rethink because the workflows were built for humans, right? In other words, do this in a
Right.
spreadsheet, send it to the guy and deliver like whatever it is. But now that
Right.
they can have agentic AI do this, how good or adept at these companies at rebuilding their workflows so they can take full advantage of agentic AI?
Right. No, I think that's an interesting question. To be honest, we have not seen, especially in an industry like supply chain, for the workflows to evolve so far. Yes, theoretically, it's correct. When agents are communicating among themselves, they won't follow the same workflows as humans do. A lot of these workflows will change. And, we are also seeing a lot of things happening, but we have not seen that happen as of yet in industries like this. What we are still trying to achieve is the basics work in these industry and get that adopted, right? Even simple systems running as co-pilots, as agents, creating those automations for these companies to a point where, yes, maybe on the other side, when you negotiate with the supplier is also an agent. So the workflow needs to change. Today, probably it's still an actual supplier who is, talking to the negotiation agent and so on.
Yeah, that was the other thing I wanted to ask you is at what level does the flip side of this market have to change as well, right? So in other words, if I'm a company that's involved in the supply chain, or if I'm just a manufacturer or whatever, I need to have my supply chain understood. I need to do all the things you were talking about. But on the flip side, I'm dealing with 100 different suppliers. At what
Right.
level do they have to be ready for me as well so that I can communicate with them in a way that's agentic? Because before I was literally just like calling them and going like, what is this number and what is that number? What has to change on the other side of this market as well?
Right. No, that's such a good question, Michael, and we think about it a lot. What will it take for the suppliers to also start adopting to a lot of these agentic
Mm,
workflows, right? When an AI is trying to run the RFQ process, bidding process, is there an AI on the other side which is able to adopt to it and they are able to move a lot faster? I don't have a definite answer to that because the supplier industry is also in some ways as ancient as some of these industries. They have not adopted to technology as well. They are used to the same workflows of
right.
talking to someone on a phone, writing an email, looking at an email. WhatsApp is the latest tech that has made through these suppliers a lot of that's their 26 version of running these suppliers digitally, or like the entire process digitally, right? So we're
Right.
yet to see, uh, uh, we feel that what could happen is uh, as more awareness happens, they will also end up maybe adopting to some parts of automations within their ecosystem, but we are yet to see some of that happening.
If I come back to you in like 6 months or 8 months, what do you think the difference is going to be in the place where your customers are today and where they will be then?
Right. So one thing I'm 100% sure, these system of records will sit there. You'll have the SAP
Yep.
being the core ERP. You'll have Kinaxis 09 doing the demand planning and all of that. I feel customers will figure out a way to move from system of records to system of actions where they'll be able to build this intelligent layer on top of these systems to execute a lot of workflows, not completely autonomously, but yes, parts of it where it makes sense, they'll be able to run that autonomously. As I said, procurement is a great area, very manual.
Yeah.
A lot of it can be automated. A lot of it can be much more efficient, and I think we'll see that happening very soon in the months to come. We have already started seeing that with some of the customers we are working with, where they have been able to adopt and they have been able to build that layer. What remains core as we go back to the initial thesis, they need to first sort their data. They need to, the
Yeah.
data is messy. So they need to figure out a way to make sure step number one is covered, and whosoever they work with understands the business well enough to make that change happen.
So if some of these businesses, and I can let you go after this because I know you're busy, but if some of these businesses are also using big SaaS platforms, how important is it for them, whether it's from an ERP perspective or even from a warehouse management perspective, right, which is going to impact the way they interact with their supply chain? How important is it for them that all of those interactions as well can be agentic, which means that those SaaS platforms become API callable and MCP compliant so that the stuff that you're building can then talk to those systems as well in a way that's more direct and more immediate?
Right. The I think that's important. The hardest problem today we feel is the communication channels with these systems and the
Mhm.
ability to move data away from these systems, which is not that straightforward somehow. But these companies are also trying to make these systems work in a lot of agentic fashion, and they're definitely trying to extend the capability in a way where they could themselves enable a lot of these agentic capabilities. But again, the problem what we see is these retrofitting models does not work, right? They try to force a way of working downstream to everybody who is trying to use the software, which becomes the harder problem.
Yeah, yeah, yeah. Exactly. Okay. Well, look, I'm gonna let you go. I hope you found this as
Right.
interesting as I did. I just
Right.
is it storming where you are?
Yeah, it's storming. It's raining heavily for the past couple of days here.
I think that's the first time I've seen lightning on a podcast.
Right. That's
I think I may
amazing.
want to patent that. Actually, it was kind of cool out your back window.
Yeah, and it looks good.
It looks super good. I wish you could manifest that like on demand. That would be kind of cool.
Right.
Anyway.
Yeah, I think I'm doing this for the first time on this. Generally on Google Meet and Teams, I have a visual background,
No, I
which is
love it.
not
It's
this.
way better
But
this way, man. Way
yeah,
better.
I
Come
think
on, you could
like
if you were doing it on Google Meet and you had some virtual background, I never would have been able to see the lightning. It's way better this way.
right. I think we're just lucky we ended up creating a better background than a virtual background could.
Okay, man. I'm going to let you go. Thank you so much for doing this. I really appreciate your time. And you've been very generous with it as well. So thank you so much for doing this tonight. I really appreciate it.
Thanks, Michael.
Okay, bye
It
for
was
now.
great being here. Take care.
Yes,
Bye.
thank you.
Bye.
Okay, that is it tonight for AGTP Daily. Thank you again for joining us. Give us a thumbs up on today's video. Thank you to everybody who actually watched this in real time and to everybody who's going to watch this after we post it up on YouTube, on X, and on LinkedIn. Subscribe to our YouTube channel. It really helps us as well. And follow us on all of our socials, on X, on Instagram, and on LinkedIn. And as always, let us know if there's anything in the comments. Please comment everywhere as much as you possibly can. And if you have questions for us, please get back to us. Today is Friday. We will not be back tomorrow at 11 a.m., but we'll be back on Monday at 11 a.m. Thank you, as always, to Martin Runford. My name is Michael Waits. Bye for now.